Good morning, traders. Welcome to Trading Together. I'm Mel Gacee. Today is Tuesday, March the 3rd. Welcome to another day of Armageddon. This is wild, right? I just want to say hi to everybody. And if you're here this morning and you haven't said hi yet, please drop your name in the chat. I would love to get to meet you and answer any questions or comments you might have. This is a place for traders of all levels. This is a place where you can learn and ask your questions. You can follow me trade live. You can listen to the market analysis and some of the perspectives I bring. And so I would love for you to engage and ask those questions. This is a free place to do that. And I have been trading for over 20 years. This is what I do for a living. I'm a profitable day trader. I do this for a living. I have my Series 7. I'm a licensed stockbroker. I've been doing this for a long time. So take advantage. This is a place where you can get some questions answered for free, and you can get some training here. And like I said, this is for traders of all levels. So I'm happy to help all levels. So drop your name in there and say good morning. We have got Gavilan, good morning, and Gaia Body Elixirs, good morning, beautiful lady. Well, thank you for that. Thanks for that sweet good morning. I appreciate it. All right. There is a crazy day going on here today. We're going to talk about this right now. And as is the usual at this time of the morning, when we jump in together, we notice that roughly this time of the morning, many days, we see a trend starting, a kind of a sideways trend beginning. So we are kind of getting that right now. Donna, good morning. How are you? I know you two took some losses yesterday. I know it's hard, so hang in there. I promise you those will be neutralized in just a few days. I know it was tough, but we'll be okay. So yesterday, on a different stream, I was trading and took some puts because I was, like everybody else, looking at the absolute wild behavior of all of the what's going on in the whole geopolitical arena, and the doorstep of World War III. Now, I don't think Russia and China are going to get involved on that level, but certainly things are blowing up in the Middle East. And the main idea is oil is being affected. The supply of oil is being affected. And so, I was jumping in yesterday, full guns blazing, trying to short this market. And what did we get? An absolute reversal. And so some people that followed me also jumped in with me, and we took a big loss yesterday. It was very tough. But what it was, obviously, we can see, is it was manipulation. And here we are with this big down, almost 2 full%, even though we are climbing right now. So, the real dump happened today. And so that was tough. I did make some today. I put some puts overnight because I said to myself, there is no flipping way that this whole arena, this whole circle, I'm not making light of the human tragedy. It's always sad to me. But, I said to myself, there is no way that we could possibly climb in the market. Oil screaming and the Strait of Hormuz in a de facto closure and all of this unrest happening. And so I put some puts in yesterday at the close or just before the close. And those did really well. So I'm up nicely today. But today we're going to look anyway. What I was saying is for Roger and sorry, those were tough losses. I'm sorry you missed out. Hey, we've got, me long enough. We've got the win rate. We are profitable over the long haul. You're going to be fine. It's just going to take a few days to dig out. And that kind of sucks, but it'll be okay. All right, guys. All right. Roger, good morning from Bergen, Norway. Well. Enjoy that, Roger. All right. We have a strong push up here after. Where did we hit? What, guys? What have I been saying? What was going to be our low? Do you guys? What level did I keep saying had to be tested? Anybody remember? What did I say? Has to be tested. We're going to come back and hit this low. What was it? Gavilan, 670. A plus. A plus, Gavilan. What did we hit today? 669.6 and then bounced. Isn't it amazing? That level, I went back on my charts. I marked that level on February 5th. So we have waited a month for this test. And what did I say? I said, this is weird. We dropped in the after hours all the way down to 670. And then we turned and we never looked back for a month, right? But I kept saying it. We're going to hit that 670. Has to be tested. Sure enough, we tested it today. And what did we do? Bounced. Here we are, bouncing off of 670. Crazy, right? Absolutely crazy how these zones get respected. That's why you've got to be watching all the time. Pre-market, post-market, checking off those lows. I'm always checking off the lows of the pre-market and the highs of the pre-market. I'm checking off the lows of the previous day, the highs of the previous day, because those levels matter, even when it takes a month to come back and test it, which did happen. All right, so we are getting a strong call here. I am not in it. We just crossed the VWAP. Nice run here. The VIX is getting pushed back down to 25. And let's see what we get here. Don't lose sight of the fact. Yes, we're getting a strong run. Yes, we broke the VWAP. Don't lose sight of the fact we're still down almost 2% on the day. So that, by its very nature, is bearish. Even though we're getting a strong climb here, we have recaptured 50 points of this initial drop. We've recaptured. That's significant. We can trade that, but don't lose sight of the fact that we are very much in a negative environment right now. Okay. So we've crossed the VWAP. Are we going to continue to climb? What is the next level that the bulls are going to want to recover? They're going to want to recover 67.75. That is just overhead, about 15 points. Are we going to get that high? Let's find out. That'll put us at about 675, 676 on the SPY. That's where the bulls are, the next level they're going to want to get to. Okay. So the move is a little tired, a little extended. It doesn't mean we can't keep climbing, but this MACD flipped at 10:58 Eastern, so about 10, 11 minutes ago. And it's been in a strong climb. I would not take a call right here, even though it could go up more. And like I said, we've got an overhead target, about 10 points overhead, 15 points overhead. We could travel up and hit that. I would not take this trade because we've already been moving up for about 11 minutes now. All right. So what I'm waiting for here is going to be another pullback down. And let's look at the leaderboard and see, is there some chance that we might want to turn around and, either fill the gap or get a green day? I don't think so. I don't think that's going to happen. Of course, I didn't think yesterday was going to happen. But I don't think we're going to come up and fill the gap. I think today we are going to go ahead and settle at a lower price. And I think we'll probably settle right in somewhere between 670 and 675 on this SPY. I think that's where we will probably close the day. So let's watch and see. But right now I'm going to look at the leaderboard and see what's going on here. VIX is up 20%, guys. That's huge. That's a huge jump. That's what we would call a spike on the VIX. And that's the other thing. If you've been following on this channel, you know that we've been watching the VIX. We've been watching the rising bottom. And what have we said was going to happen? When we see that bottom continue to rise like it has been, we said we are ripe for a spike up on the VIX. And certainly we got that today. Spiked up to 28.1. That is pretty high up there. We'll look at the daily VIX in just a minute. But let's take a look at our leaderboard. What I'm waiting for here while we're talking about market analysis is I'm waiting for a reversal to the downside. It could continue to travel up. Like I said, we've got some targets overhead, but I'm not going to trade it because, again, the move is old. It's a little too extended for me. So I'm waiting for a turnaround to the downside. Okay. We are looking at only Microsoft. Of all the Mag 7s, only Microsoft a little bit green today, 0.2% up from its close of yesterday. Everything else pretty far down. By the way, Bitcoin has finally, looks like, decoupled from the market at large. Up until the last, I would say, week, we have seen Bitcoin and the NASDAQ, we've seen them moving together, both kind of, these tech stocks being classified as a more risk on asset. Bitcoin, certainly a risk on asset. They've been kind of moving together. Bitcoin over the last few days has begun to decouple, rising while the market has sank. So Bitcoin sitting at 68.4K. And moving up. Okay, here's another spike up here on the SPY, but that's interesting to note to me. So I am really keeping my eye on it. I think Bitcoin could be ready to start moving up, even if the markets at large might be ready to start moving down. So I will keep my eye on it. This is not a buy suggestion. However, I am bullish on the crypto space. So, okay. Back to our leaderboard again. Microsoft now kind of going red again. So just really kind of sitting at its flat line is what it's doing here. The mags at large, remember we talk about the Magnificent Seven. So those are those 7 tech stocks that are really carrying the NASDAQ and the S&P 500. Apple, Amazon, Microsoft, Meta, Google, Tesla, NVIDIA. We also classify Broadcom as one of those because it's a big player. So when we look at the MAGs, this is an ETF that was created to house all of these mega tech stocks and gives us a way to look at all 7 of them at a glance, what they're all doing at a glance. So I like to track the MAGs. And that's the ticker, MAGS, and I do track that. And right now, the MAGs are sitting at a 1.2% drop. The SPX, sitting at a 1.6% drop after this nice climb. The NASDAQ sitting at a 1.7% drop. The Dow sitting at a 1.8% drop. And the Russell bringing up the rear at 2.6% drop. Ouch. Russell's hurting today. 2.6% down. All right, still getting this climb, getting real close to this 6,775 level. So about 7 more points overhead. I think that's where we're headed. Nice little run here. really taken off some of the bite of this big drop that we saw today. Are we going to get the buy the dip today? I don't know, but I really don't think so. I mean, they are buying the dip, but what I mean is, are we going to really move significantly green? I don't think so. I really think we're gonna close this day pretty red. But right now, again, moving up pretty nicely here with a 60-point move off the bottom. Pretty impressive, right off that support zone that we labeled a month ago. Crazy, crazy, crazy. Okay. So that's the leaderboard. That's what we got going on right now. Who's really dragging up the rear? Interesting to me that gold is down 4%, silver is down 7%. So even in this risk off day, we did not see precious metals rise up, which is odd. Now, let's take a look at the dollar index. That is rising. So what that tells me is that there's a flight to cash. Okay. When the dollar index is rising, that's usually partly can be attributed to a flight to cash. So if everybody today who were sellers, net sellers, if they are just going into cash, you can see the dollar index rising, and that's dollar DXY on the Thinkorswim platform. The ticker is dollar DXY. And so when we see money rotating out of big tech, NASDAQ, the S&P 500, it is going somewhere. It's going to cash. It's going to precious metals. It's going to energy stocks. It's going to defensive stocks. We see it going somewhere. It doesn't just disappear. It goes somewhere. We have to follow the money. That's the idea. Go bonds as well, safe haven. So we follow the money trail. We look at, and we do that by looking at sectors, by looking at bond indexes, by looking at the dollar index, by looking at precious metals. That's how we track rotation. That helps us know where the money is going. All right, still climbing up here, almost at 67.75. Looks like we're trying to touch it right now on the SPX. Let's see what we do here if we punch on through. Now, if we do, we have the next level sitting at 6,800. So that's that's another resistance support level. So if we punch up through here at 67.75, we should be headed for 6,800. Let's watch and see if we get a turnaround here. VIX dropping down to 25. So let's take a look while we're waiting for this to roll over here. Let's take a look. I want to show you where the SPY found this bottom a month ago. I'm on the 15-minute chart of the SPY. Starting to get a little rollover here at 67.75. Let's see if it respects this resistance level. If it does and we start rolling over on the MACD, we can consider puts here. I would be looking at $676 puts. They've come down in price. Not in yet. Still hasn't given us the rollover signal. Okay, so looking at the 15-minute chart on the SPY. Make this big so you can see it. And there's our little minute chart that I'm going to keep my side view mirror looking at. This is the 15-minute chart going back almost a month on the SPY. Okay. Here's February the 5th after hours. So these little black background on the chart is regular hours. The gray part on the chart is pre-market and post-market hours, so off hours. But remember, the SPY trades almost 24/7. So we had this drop happen in early February. And let me zoom in a little bit here so you can see. If you look at the daily chart, you can't see this. You cannot see this on the daily chart. You will see this low at 675. You will not see this low at 670, right here where I drew this line almost a month ago. That's how they can trick you a little bit if you're not watching. And this is why I say it's really important to watch pre-market high, pre-market low, yesterday high, yesterday low. Those levels I track every single day. Okay. And this is why this low occurred post-market on February 5th. We never saw that on the daily chart. If you come over and look at the daily chart, you'll see the low was 675. You'll never see that the low was 670. You just won't see it. So when I saw that low, 50 points lower than our low of the day on the 5th, I marked it off. And what happened? We climbed from there. We never looked back. We went and did this over the top. We came down a bit here, got down to 676, never saw that 670, and I kept talking about it. Just up and down, up and down, up and down. We don't really go anywhere near it until today, right there, right? 675 was the zone. Do you see it? There's a low there, another 675 zone. 675 was the zone. But here we go, hitting that low right where we marked it a month ago. So that's a big reason why it's important to track overnight highs and lows and yesterday's highs and lows. That's really, really important. Okay, let me go back to, let's look at the VIX on the daily, because that is another one we've been tracking. And the VIX has been telling us for how long? Since December, the VIX has been telling us something was up, right? So even though we can look at these geopolitical events as kind of these black swans, and they are, it's uncanny how they happen when the technicals are aligning. It's absolutely uncanny. It's like the market knows, right? The market knows ahead of time. Certainly it does. I think it does. And of course, Donald Trump hadn't made any secret about the fact that he wanted to strike Iran. He's been saying that for weeks. How many weeks? 2-3 weeks, right, guys? Maybe more. So it wasn't any secret that this is something he was planning to do. And usually when he says something, he follows through. So you got to pay attention to what he says, because he moves the market with the things he says and does, right? So it wasn't a secret. And so in that sense, you can't really call it a black swan event. Black swan events come out of nowhere and they just whoosh, dump the market, right? Some huge issue happens. Doesn't have to be geopolitical. It could be anything. It could be the credit industry collapsing, which, by the way, I think is about to happen. But these black swan events kind of come out of nowhere, even though some people can see them coming. And they just whoosh, take the market down. So you could sort of call this strike on Iran a black swan, but not really, because we did kind of know it was coming, right? So we were kind of preparing for that. But my point is, the market technicals, they line up with this stuff, and it's uncanny how well and how that happens all the time. So I'm a firm believer in technical analysis. It will absolutely make you a profitable trader. So let's look at this, the VIX here on the daily, and look at this SPY still climbing. We are now sitting at 67.79. Next overhead target 6,800, but that's 20 points overhead. So are we going to get there? Maybe we could. All right, let's take a look at the VIX. And what have we been saying about this, right? We have been tracking this rising bottom since Christmas Eve, right here, right? You guys have seen this chart many times. And what did we say? We said these spikes, we went back and we looked left and we said these kind of rising bottoms lend toward these big spikes. And we see it over and over. These little rising bottoms lend toward the big spike. So we were anticipating this big spike. We knew it was coming. The thing about Black Swan is you just don't know when, right? You don't know when. So here's our rising bottom on the VIX. We hit these highs over here at 23. And then we hit that pop yesterday on the VIX, gave us a pop and then drop. In the market, we had this whole climb all day. So, of course, opposite of the VIX. And remember, the VIX is the volatility index. It gauges fear in the market. As the VIX rises, the market comes down. The market is afraid. So when you see VIX rising, think of it as fear rising. The water level is rising. People are getting scared. The water's up to their neck. They're getting scared. That's the VIX rising. When the VIX rises, the markets will come down. People are afraid. They're getting nervous. They're getting jittery. You could see this happening with the VIX over the last 2.5 months. Just the water level rising. You could see it happening. So we knew this spike was coming. We just didn't know when. So now we are looking at this big spike here all the way up to 28. And there is resistance right here on that, where that the November drop that we talked about. There was that big November drop that popped us up to 28 on the VIX, and we hit that today. Now we hit it and we've since retraced quite a bit on the VIX. That doesn't mean we won't pop again, because I'm going to show you November drop and what that looked like. That was a bit significant. So it's my feeling that we could be heading into an even larger drop on the daily and weekly time frame. That's my feeling. So here we've got, again, the pop on October. I keep saying October, November, and we hit that same level today, right there. Now, the most recent, before that, the most recent pop was that October drop. That is also significant. So the max spike was on 1017 and again on 1120. Let's look at the SPX and see how that correlates. 1017 and 1120. Here is 1017. Right in here. Let me zoom in. We got that big drop. And then 1017 was that final spike right there on the VIX. And then 1120, big drop, big drop. That candle represented a 6770 to 65, 200, represented about a 2 or 3% drop on the index. And that was correlating with that VIX spike, okay? So here we've got a VIX spike over here in October, VIX spike here in November, and we see these large correlated drops. Today's drop looks halfway tame compared to this drop, doesn't it? It is significant. It's a big drop, but it looks tame compared to this one, doesn't it? So I do believe we could be heading into even more trouble. All right, now we're rounding over, guys. Let's take a quick look at the 1 minute and see if we want to take some puts here. 67.70, we're losing that 67.75 zone. VIX giving us a little pop, sitting at 25.20. We could take a put here. I would be looking at the 676s. All right, I'm having a little trouble with my Thinkorswim, but I would get in right here if I were you guys. I would take the put. I've been having trouble all morning with Thinkorswim, which I don't think is by accident. I think some days they make it a little difficult for us. All right, so if you got in the put, watch your profits. I would get out at somewhere between 5 and 10%. You're getting a nice little drop here. When you see green, go ahead and take it, in my opinion. Let's jump back over to our ES. $61. All right. It may try to hold 675 here on the SPY. Let's see. 67.65. We should be able to come down farther than that. All right, you should be nice and green on your trade. If you are, take your win. It may, like I said, it may try to hold 675 as a support today. That's been an important level. All right. Hopefully you guys got a win from that. Taking wins today. 120 on one trade, 207 on another. Nicely done, Gaia. Yeah, take your wins. That's what keeps your win rate high. All right, I'm going to take a look here at the volume and see where we're sitting. I'm looking at the volume on the options chain to show me what I'm trying to see on that is where the majority of orders are being placed. So I'm looking at the option chain for today's expiration, and I'm looking at the volume column. On Thinkorswim, you have the opportunity to change your columns. It lets you customize. Gavilan, bounced, wasn't able to get out fast enough, down 25. Okay, Gavilan, sorry to hear that. Let's take a look here. It does look like it might want to hold 675. Hopefully it'll come back down and retest it for you. Where was I? Options chain. So let me get over to the option chain. So we've got, again, with Thinkorswim, you have the ability to customize and put volume out here. So I look at volume, I look at open interest, I look at delta, and those are kind of the three things that are important to me. So when I'm looking at today's expiration, what I want to see is, where is the volume sitting? At what strike level is it sitting? Now, volume is dynamic. It moves quickly. It moves a lot. So you want to kind of take it with a grain of salt, but it can kind of give you some indication of where we are in the moment, right? So right now we've got the highest volume sitting on the 670 strike on the put side. That was our highest volume. That does not mean we're going back down there. That just means that that is where most of the volume has been sitting today. And we've already hit it. So it doesn't mean we have to go back down and hit it again. The next highest volume is right here at the 675 call strike, right where we are. We're a little bit over that. So 675 calls is the highest strike on the call side. Then we've got $680 calls on the call side. So it's kind of, bouncing around back and forth. But right now, we are trading right here at this 675, 676 level. There it goes down for you, Gavilan. Hopefully you can get it to come down here. Okay, so that's kind of one thing I'm looking at, is the volume. The other thing I look at is gamma flow. And I have a product that I pay for called Cheddar Flow. It's a pretty good product. It shows me where gamma is sitting. And gamma just means, where are the dealers hedging, the market makers, the people that are actually keeping this market going? Where are they sitting? Where are they hedging? And now this is also a dynamic number. It does jump around. But we've been squarely in negative gamma all day today. Negative gamma meaning we have more of a tendency to be coming down and sliding down than we do to move up. So we've got gamma 4.6 billion for today's expiration right now, negative gamma. So of all the gamma, that's where the dealers are sitting, we have $5 billion sitting in negative, in put gamma. We only have 500 million sitting in call gamma. That is a huge skew. We are very, very, very heavily skewed to the put side today. So 5 billion sitting in put gamma, 500 million sitting in call gamma, for a net negative gamma of 4.6 billion. And then we look at the chart, and the chart tells us, where are the dealers actually sitting? Where are they hedged? Right now, the put wall, the biggest hedge on the put side, is at 675. So we could expect some pinning, magnetized movement towards 675. We also have almost the same level of negative gamma sitting at 668 and 667. That is new. We have not seen that before. We have not seen gamma sitting that low before. Let me show you the screen, okay? I want you to see what it looks like. Let me stop sharing my chart and show you the gamma chart. Okay. All right, do y'all see that? Hopefully you can see that. Let me get my chart over here so I can keep an eye on what's going on. Okay, so here, this is what I'm looking at. We've got put gamma, total put gamma for today's expiration. So this is based on 3/3, today's expiration. Total put gamma, 5 billion. Total call gamma, 500 million. Big, big, big disparity there. Net gamma, 4.6 billion negative. Pretty negative day here. And then we've got the put wall sitting at 675, and they just moved. I was looking at, they just had gamma sitting here and it just moved. So like I said, this number is dynamic. See how it's kind of shifting. So put wall at 675 means we should try to magnetize there. Got some put hedging growing at 680, which is overhead. Means we could possibly move up to that level. But again, this movement is dynamic. It's constantly shifting. If you look at all of the gamma, let me get over there. Looking at all of the gamma for all expirations, pretty heavily skewed here. See how it just keeps jumping right now? They're really jumping around right now, trying to hedge their positions. 17 billion in net gamma, guys. That is huge, huge level of negative net gamma. 26 billion on the put side, 9 billion on the call side for a negative net gamma over all expirations of 17. Again, it jumps around, it moves, but that is a big number. All right, so here is where we're sitting. 675 on the put wall with our next highest strike at 680 and the next after that at 670. And we're getting some growing gamma here at 665. Like I said, we have not seen that before. This is new. This growing hedging here at 665 is new. All right, so then I'll go over to today's expiration. And we'll look and see. Again, this is what we were just looking at a minute ago. 5 billion on the put side, 500 million on the call side, negative 4.7 on the net side. Then the put wall sitting at 675, the next highest put wall at 680, and then 670 after that. Now, look at this. Virtually no call hedging up here. Nothing. Virtually negative. We've got 695 as the call wall, but tiny amounts here. These aren't very big amounts. So there we go. That is the one of the other tools that I use. I like it. I think it's a good tool. All right, let's jump back over to our charts. There we go. Still holding right here at the 675, 676 level. They really want to try to hold that level. Bulls do. VIX moving down a bit, 24.6, still very, very elevated on the VIX. All right, I'm going to take a look at the MAGS chart. We're going to look at the daily chart, and we're going to look at what's going on with the 100 and the 200-day moving average. This is something we've been watching for a couple of weeks now. We have breached the 100 today on the SPX. So that is a pretty negative thing. Even though we are pretty consistently climbing here, it's a pretty negative thing. So let's take a look at the SPX chart and what we are looking like with the 100-day moving average. Here's another bounce for you up to 677. Really moving off that low there, 70 points off the low. Okay. Look at that candle, long wick on the bottom, really trying to pull up here. But what have we been watching? We've been watching this moving average. This is the 100-day movie. This is the daily chart of the SPX. That is the index, the S&P 500. This is the 100-day moving average. This is really important. Institutions trade based on this level. The 50, the 200 moving averages are important to the algorithms and to institutional traders. Okay. So what happened, what has been happening, we've talked about this before, is that we have been really trying to hold this 100-day moving average. Wow, we are really pushing up here. 678, quite a strong, look at this wick on the bottom. Wow, very strong wick. They are trying to turn this candle green. Anyway, we have been trying to hold on to this 100-day moving average. So we bounced it, we bounced it, we bounced it, we bounced it, bounced it, bounced it, bounced it many, many times. We've hit the 100 and bounced it. That is the fact that they held the 100 is bullish, but the fact that they tested it so many times is bearish. So they kept pounding it and pounding it and pounding it. And then what happened today? What'd they do? They gapped below it. Boom. Big gap below it. Now we are squarely below the 100-day moving average. Are we going to try and reclaim it? Well, they'll try. Can we? I'm not so sure that we're going to be able to reclaim it. And here's why. I'll show you the other charts. So the 200 is way down here, sitting at 65.70 roughly. I believe we're going to hit that. Probably within the next few days and weeks, we're going to come down and hit this 200. That's what I think is going to happen. I don't think we're going to go straight down, although we could. I think we'll get some higher low or lower highs, right? And that's what we've begun to make since end of January. We've made, this is the high. Here's the lower high. Here's the lower high. We will probably make another lower high and another leg down is what I think will happen. So eventually I think we're going to test this 200 and I'll show you why I think so. When we go and look at the Qs and the mags, you will see. So again, the SPY really tried to hold on and then boom, lost it on a gap down. Now let's look at what the Qs did. The Qs are the ETF over the NASDAQ. So this is the NASDAQ chart. Let me take my volume profile off because it's a little bit obnoxious on the daily. All right, there we go. Look at the difference in the Qs, right? The high is over here back in October, and then it just sort of sideways, 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 made a recent high here. And this part kind of looks like the SPY making lower highs. But what did the Qs do? The NASDAQ, what did the NASDAQ do that was different than what we've done? The NASDAQ lost its 100 and it tried to reclaim it. And it tried to reclaim it, tried to reclaim it, lost it again, tried to reclaim it, lost it again. So this is a different behavior than the SPY. The SPY has been holding the 100, where the Qs has been trying real hard to get back there and has not been able to. Now we've got the low on the Qs almost at the 200. And like I said, I think it's going to come down and test that. And I'll show you the next chart and you'll see why. So the Qs have been, over the last 5 days, dropping consistently. Even though we're making green candles, we are still making lower closes. That's negative. And I think we're going to hit this 200. We're going to test it and we'll see where we go from there. Here's why I think that's going to happen. Let's look at the Magnificent Seven, the MAGs. And what have they done with this drop? So they also hit their highs back here in October. like the Qs, which we would expect, right? The Qs, the NASDAQ is the tech index. So we would expect that the Magnificent Seven would direct what tech index was doing, what the NASDAQ was doing. So same kind of behavior, very similar chart, which we would expect. A high in October and sideways, sideways, sideways. And then we slowly began to make these lower highs from really from here. Lower high, lower high, lower high, lower high. But what is interesting about the mags, we lost the 100 back here or a little bit earlier, 2 weeks earlier than the NASDAQ did. We lost the 100, regained it, lost it, and didn't look back. Lower high, and then what happened? We started testing the 200. Uh-oh, that's super bearish. We started testing the 200. It tried. Look how it's respecting that line. It's really trying to hold it there, really working on it. And then what did we get yesterday? Well, actually, Friday, we got a drop down through the 200 and it did not close above it. Uh-oh, that's a problem. Yesterday, gapped way down under the 200 and did close. Let me zoom in so you can see it better. This turquoise line is the 200. So it dipped down below it on Friday and it could not reclaim it. That's a problem. Monday dipped way down, but what did it do? It did reclaim it just barely. You can see it right there. Just barely closed right on it, right on it. And then today, boom, gap down. So now we're under the 200. What's it doing today? Well, the mags are making a green candle. Okay, mags are down 0.9%, but they're making a green candle. That's because they're over yesterday's close. Does not mean it's not a negative move. It is a negative move. 1, 2, 3, 4, 5 days of down. Even though we're making green candles, we're still in a downward trend. The mags is below the 200 pretty significantly today. If they don't recover that, we could expect to see more selling. This is possible. So all things in the NASDAQ and the S&P 500 point back to the behavior of the Magnificent Seven. And we are looking at some pretty negative behavior here. So all that to say, I think in the big picture, the big macro picture of the next days and weeks, we are probably moving down. That doesn't mean we won't jump up. That doesn't mean we won't recapture the 200 on the mags. It doesn't mean we won't recapture the 100 on the SPY. We sure could. But I think by and large, over the next days and weeks, we are going to start moving into a downward cycle. That's what I think is about to happen. And that will change our trading a little bit, because what have we been trained up until now? Let me go back to the SPY. What has the market trained us for the last couple of years? Let me zoom way out so you can see. What have we been trained to do since, I don't know, 2025? Even before then, actually, we have been trained to buy the dip, 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 buy the dip. We've been trained. It's been pounded into our brains, buy the dip. We are no longer in a buy the dip environment. Look at what has changed. Just by zooming out, you can see what's changed. This pattern is different, right? This upward pattern is different. Now we're sideways and we're rolling over. If we move into a negative phase, which I think is possible, we're going to have to change our mindsets. It's not necessarily going to be a buy the dip environment. There will be days where we can buy the dip, but if what happens, if I think If it happens the way I think it will, this downward trend is not going to be a buy the dip. It's what we would call a sell the rip. So there's two different kinds of markets, right? Buy the dip, sell the rip. Buy the dip means, of course, when it comes down, you buy it. Sell the rip means when it moves up, you sell it. When it moves up, you sell it. So I think we're moving into a sell the rip environment. We will see. We will see. All right, let me get back to my minute chart. We are sort of slowing down here at 677 on the SPY. Johnny Fitness, cycle theory also says this. Exactly right, Johnny. What we're talking about is a cycle. You're exactly right. We're talking about market cycles. Every market has a lifespan and it has a cycle, and we are in a late cycle market, which a late cycle bull market, right? We're in a late cycle bull market. Exactly right, Johnny. Thank you. All right, let's get over here to our minute. Do we have any kind of a good trade? We are currently testing the low of day from yesterday. So look at that. We jumped all the way down here to our 670, climbed all the way back up to yesterday's low of day. Let's see if the bulls can push it back up through there. We're still down about 1.2%. So keep that, bear that in mind. The context, believe it or not, is still negative even with this climb. Okay. So let me get over to my ES. And what the market is not liking right now, of course, is the risk to the price of oil. Let me take a quick look at oil. I'm just going to track the sweet crude futures up today. Okay, let's look at the price over the last couple of days. Wowza. Wowza. Big spike in oil today. You can expect that to equate to a negative market. Oil runs the world. Oil runs the global economy. When we see oil spiking, you can be assured the market is not going to like it. So take a look at this chart. We had this shock yesterday in oil as the strikes were carried out in Iran over the weekend. Monday, we got the shock to the upside, and then everything settled down. It came right back down. And then what happened? Boom, shot it up today. This candle on oil does not look anything like our daily candle on the SPY or the SPX. This is a strong bullish candle. This is an engulfing, what we would call an engulfing candle, meaning this candle is bigger than the one before it. It engulfs the previous candle. That is a symbol of strength. This green candle here engulfing this prior candle is a symbol of strength. We have got a lot of strength in this upward movement on oil, up almost 7% today. And cumulatively up 67 to 75. So about what, 12, 13, 14%, somewhere in there. A good jump on oil over the last 2 days. All right, here we're getting a little round over on the minute chart. Looks like we could be holding this high of or low of day. But the idea is you've got to remember to take the big macro picture in mind. Oil is pumping. That means the market is not going to respond well. The other thing to look at is the dollar index. What is the dollar index doing? It's up as well. Dollar index, where when money leaves the market, it doesn't disappear. There is always a flow. We can always track where the money is going. And usually when money leaves the equities market, it goes to the standard places. It goes to the bond market. It goes to safe havens, bonds, precious metals. Those are safe havens. It goes to cash. People pull their money out and go straight to cash. That's when the dollar goes up. It can go to defensive stocks, energy. Let's just for the heck of it, I know we're late, but let's take a look at the energy sector. I bet you're going to see something surprising here. Look at this run on energy. Holy cow. What does this run equate to? Well, it equates to, look at that, 1224, where we saw the VIX bottom out and start to climb. Look at what energy did. It's been climbing. We got a nice pop up yesterday, another pop today. So energy is another place that we see money flock to, defensive stocks. Okay. So all that to say, I expect to see more downside coming. It doesn't mean we won't pump up tomorrow. We won't get a higher low. We probably will. But in the big picture, I think we're heading into a little bit more of a bearish market. All right, guys. Well, if you are interested, you could consider puts here. Like I said, my Thinkorswim has been acting really weird today. I've been getting the spinning wheel every time I try to take a trade, which is super annoying, but looks like we could be coming back down here. That being said, we are at the end of our stream and we will be back tomorrow morning at 11 a.m. Eastern. I hope you all have a great rest of your day. I appreciate you joining, and hasta la vista to Johnny Fitness there. But thank you guys so much for joining. Thank you for your questions and comments. It's always fun to trade with your friends, right? With other people. Trading can be lonely. So Gavilan, thanks, Mel. Have a great day. Gavilan, were you able to get out? I hope you were on that drop that we got. Let me know. You can text me, Gavilan, if you have any questions. All right, you guys have a great rest of your day. We will see you tomorrow at 11 a.m. Eastern. Bye for now.